Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Cohen, Executive Vice President and Head of North American Markets at Nasdaq, to review an unprecedented year in the markets, trends that will continue into 2021, and Nasdaq's focus as we get set to turn the calendar in just a few short weeks. It's great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill.
And 2020 was an unprecedented year in the markets for investors as the ecosystem's infrastructure and people were put to the test. How would you categorize the market's resiliency and pivot to a virtual environment?
Yeah, it was incredible. The markets functioned really well at the height of the crisis. They were part of the solution, supporting investor confidence during the most trying times. And that was in large part due to our investments in capacity and resiliency in prior years and managing through that collectively with our clients. And we did most of this and most of the volatility, or the most volatile period of the markets, while 98% of us were working from home. So that's really amazing. It's a testament to all the collaboration tools that we have available to us. And it's also a testament to all the planning we had done beforehand to make sure that this was possible. And it wasn't just possible for Nasdaq. I think this sentiment would be shared across the entire industry.
What are some of the trends that will follow into next year?
I think the uptick and rise in retail trading, not only in equities where we've seen off-exchange trading rise to 44, 45, 46% of the market, but in options where we've seen almost 100% increase in retail trading. And so our focus coming into 2021 is to make sure that we support investor education so that their experience in these markets are ones that will last them and make sure that they stay in our markets for the long term. And I think the other one is just the adoption of the cloud, or the acceleration of the adoption of the cloud, where the pandemic has also highlighted the need for more flexible, more immediate resiliency and capacity. And that's only afforded to you through the cloud. So I think a lot of firms, including us, are looking to that for the future to make sure that if we ever experience such a pandemic or a need for that type of flexibility, that we embrace technologies that allow for it.
The Center for Financial Markets and Policy at Georgetown University's McDonough School of Business hosted its annual Financial Markets Quality Conference virtually during the week of November 16th, which assembled policymakers, market participants, and scholars to discuss critical issues related to financial market quality and propose solutions for the future. You participated in a panel focused on market volatility, the economy, market structure, COVID-19, and Brexit. What were some of the key themes the industry is focused on?
Yeah, I'll share just a couple, and it was great to be part of that conference. One was the financial transaction tax that took center stage as we think about that heading into 2021. The pandemic has put a number of states' finances in a difficult position. And so all the success that we've seen in the markets where we have today, the Dow hitting 30,000, Nasdaq above 12,000, the question is, what will the impact of a financial transaction tax not be just on our industry, but retail investors and institutional investors, because they're the ones that will bear that. So there was a conversation around that and making sure that we educate and inform policymakers and state officials. The other was around how markets manage risk during these uncertain times. Everything that stems from market-wide circuit breakers to single stock circuit breakers to short sell circuit breakers, and of course Reg SCI. So there was a renowned interest in how markets are managing that risk, and are we doing a good job of holding investor confidence. And then the final one was around digital assets. And this was interesting because we talked about the price of Bitcoin, which nobody talks about now, although in 2017 was when it was at the same levels, we were all talking about it. And the dislocation between, say, Bitcoin, which is up almost 100% this year, and gold and silver, which is effectively flat. So does this lead us to think that there's greater investor confidence, especially on the retail side, in these assets? Or is there going to be more trust in these assets? And it renews the conversation around a potential ETF on Bitcoin or other digital assets. I think that's of interest.
Tal, what does the impact of the election and forthcoming changes at the SEC mean for NASDAQ?
Yeah, we think about that a lot, and there's really three themes that we're keeping a close eye on. The first is around more disclosure and more rules on ESG, in particular the E part of ESG. And so they'll look to formalize, standardized rules around that. We think that's good, but there needs to be a lot of education, especially on the corporate issuer side, around what it means to be carbon neutral or to take into consideration climate change and things of that nature. The second is private versus public markets. We've seen the current SEC make private markets more accessible to retail investors. They've increased the disclosure there. But our question will be, and our thoughts around private versus public, is will the new and incoming regime look to make public markets more attractive and continue the trend that we've seen over the last couple of years in terms of trying to make sure that our public markets are the most attractive in the world? So public versus private is a key theme. And then the third is really in terms of shareholder reforms. We've seen a lot of progress being made on the proxy reform proposal that we put forth. And we're wondering if any of that will be rolled back. And if it is, it actually could work to hurt the IPO market that we're seeing that's so strong these days. So those are the three themes that we're thinking about and focused on. And we just hope that the SEC finds a good balance between investor protection and ensuring that our public markets are the most attractive in the world.
And finally, as the calendar moves to 2021, where is the focus for Nasdaq's North American markets?
Well, we're really excited about VolQ. It's a new volatility index we've recently launched based off the back of the Nasdaq 100. And the Nasdaq 100, as we know, is now the most popular, one of the most popular and relevant indices for retail and institutional investors. So we think there's a great opportunity to expand our proprietary product franchise and options. The rollout of VolQ goes towards that. We just launched it in partnership with the CME this October, and then we'll launch the VolQ options contract on our own markets in the first half of 2021. So we're really excited about that. And then more broadly, we want to continue to be customer focused and develop purpose-built solutions on the equity side for our customers' needs, where you see the changing dynamics with retail and even institutional. So we're completely focused on trying to address their needs as 2021 evolves.
Tal, appreciate the insight as always. Thanks for joining us on Trade Talks.
Thank you, Jill. Have a good day.
Thanks, you too, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.